now Praveen Sahay. He is research analyst at PL Capital who tracks the EMS space closely. Now, really, the conversation with regard to EMS is that we've seen some choppiness in terms of performance within that EMS basket. And viewers, as you would well understand, there's suddenly opportunities cropping up in IT, of course, and we spoke about that with Shishovan. Are there opportunities within that EMS basket? And hence, good conversation likely with Praveen. Praveen, let me start off by setting the context. You've got a decent set of numbers overall from that EMS basket. Anything that's standing out for you, both in terms of commentary as well as in terms of numbers this quarter? Just maybe the top two, three, if you can give us a perspective.
Yeah, sure. Thank you for having me. So, on the EMS side, for a quarter, if I look at for our coverage, the growth has been around 30% in the top line. And in that, we have to look at the outperformer as well, like some EMS companies or the contract manufacturers look at it differently. So like of Amber, who has outperformed quite significantly from estimates as well as to the peers, and also the Syrma, which has also given a very good set of numbers for a quarter. Now here is the way forward to look at the order book. In fact, for the Syrma, the order book sequentially increased by a 10%. So that is also quite a healthy, and the way forward, the contribution of the segments for them, industrial and auto, which is on the higher margin segments as compared to their earlier consumer, is expected to bring the margin improvement, and their guidance related to the margin also upward revised by 100 basis points. So they had done well for a quarter. The way forward guidance for them is also good. The only thing is the stock has also done, post numbers run up. So there is a little room for on the valuation catch up. So that is the one. Second, on the Amber, because Amber is largely on the RSC contract manufacturing, and there they had outperformed. Consumer durable has given a very strong, healthy set of a 26-27% of a growth with a margin improvement. EMS, because of their inorganic expansions, given a very strong set in top line, margin reached to a double digit. They are guiding for a double digit of a margin for the next year as well. And the overall consideration of their inorganic expansions will also add to that in the coming years. The growth wise, if I look at way forward, Ambers looks quite a promising. On the valuation side, as a whole industry, somewhere trading at around 41, 43 times of a 27 earning, and nearly around 30 to 33 times on FY 28 earnings. And in that, those who have outperformance, good order book, and the guidance related to improvement in the margin, I believe they are going to outperform from here as well. So Amber's looking good from here, even to some extent Syrma, even though there is a little room for the valuation to catch up. Apart from that, the Avalon also did quite a well for a quarter. Their guidance always be in the lower, and they outperform from the last 3 quarters.
Praveen, I will, apologies, but I will interrupt you there. So let me talk about Dixon in particular. When I'm looking at the last 5-year chart in terms of, again, price to earnings multiple, it's compressed substantially. There is margin uptick that we've seen this quarter, and that at least the management seems to demonstrate confidence. When we spoke with them earlier last week, there was demonstrable confidence that the margins will continue on an improving trajectory. Do you believe that there is both growth upside as well as margin upside here and now? The margin of safety looks decent where a Dixon is concerned in particular?
So first, disclosure on the Dixon, that's we don't have a coverage for a Dixon. But yes, what you had said, definitely they had guided, especially to their one of the client related issues going to get resolved in the coming year, and the growth to come in, especially in the mobile segment, the way forward. Definitely the stock has also corrected because of lower than the estimated numbers performance in the Q3. And however, the guidance is quite intact. Improvement they are expecting from the mobile, even on the margin front. So we don't have any, official target or the coverage on that. But yes, if I look at the commentary from the management, it's looking promising.
Okay, Praveen, thank you so much for coming in and speaking with us this morning. We'll let you go on that note. Thank you for that view. Viewers, what we'll have